just take a moment to remind people to mute their line if they're not asking a question. You can do so by pressing *6 and unmute when called upon by pressing *6. Avant de poser une question, veuillez vous identifier et libre à vous de poser vos questions dans la langue officielle de votre choix. Pour mettre votre ligne en mode discrétion, appuyez sur *6. Pour l'enlever, faites *6 encore une fois. And with that, I'm going to have our queue up our first three questioners. I'll start with Julie Gordon from Reuters, Greg Bunnell from BNN, and then Mark Rendell from the Globe and Mail. Julie, first question, please.
Hi there. Thank you, Governor. Sorry, I'm trying to avoid the echo here. So you said today that there are good reasons to believe that the factors driving inflation remain temporary, but they are a bit more persistent. Are there any policy implications to this persistence?
Okay, we'll try again, Julie. Sorry about that. So let me speak to the persistence of the factors. So in our July monetary policy report, we indicated we expected Q3 inflation to average around 3.9%. If you look at where it's come out in July and August, it's very much in line with that expectation. But what I would highlight is, since August, a few things we've seen. The disruptions to the supply chain, the shipping bottlenecks, they're continuing, and they could be more persistent than we previously thought. In labor markets, we saw good wage growth good employment growth over the summer as the economy reopened. But at the same time, we also saw rising vacancies. And interestingly, this is against a background where we still have unemployment over 7%. We still have a relatively elevated level of long-term unemployment. And then more recently, energy prices have moved higher. So when we look at the various factors that are pushing inflation above our target range, they look to be very related to the unique circumstances of the pandemic. It's higher prices for computer chips are showing up in things like cars and other electronics. Bottlenecks and delays in shipping are causing the prices of getting passed on to the prices of some goods, or creating shortages in some goods as they don't get delivered, which can push up their prices. We do expect that we will work through these supply disruptions, but I will say they are proving to be more complicated, and they could last a little longer than we previously thought. On the labor market side, as I said, we've seen strong employment growth through the summer, and it's been in the areas that it's been particularly concentrated in the hardest hit areas, which is very, very positive. It's reducing the inequalities, the unevenness we've seen in the labor market. At the same time, we've seen rising vacancies, and I think we've all heard, we've all seen a help wanted sign in our favorite local restaurant. And as I said, this is coming in a background where we still have high level of unemployment. I think what we're seeing here is it is more complicated to open an economy than to close it. And this process of companies finding workers and workers finding the right jobs, it's taking some time. What that means is that, this recovery, we do expect to continue to see a good recovery in the second half of this year, but it could be a little slower. It could take a little longer than we expected as we work through these. But these labor market frictions, we do expect we will work through them. So we do expect that these effects will be temporary, even if they are somewhat persistent. Look, at the end of the day, our job as a central bank is to make sure that one-off increase in prices doesn't become ongoing inflation. And there's a few things we're really watching what we're really looking for is to see any signs of spreading. So we're following measures of expected inflation very closely. Short-term measures of expected inflation have moved up, not surprisingly. Inflation's moved up, but medium and longer-term measures of expected inflation haven't. Wages have ticked up a little bit, but wage growth remains moderate. And what we're really looking for there is that wage growth is in line with productivity growth, so it doesn't become an independent source of inflation. And so far, we're not seeing that. Having said that, we're conscious that inflation it's been above our target range for a few months. We expect it will be there through to at least the end of the year. Our margin of error on inflation is diminished, and we're going to be watching expected inflation, wages, and for any signs of broadening very closely.
Thanks. We'll now go to Greg Bunnell, followed by Mark Rendell. Greg?
Thanks, Governor. Thanks for taking my question. Still on the inflation front, the consumer's expectation of where inflation is headed can be, arguably as important or even more important as actually what does happen to inflation over the next 6 or 12 months when we talk about it being transitory. So right now the consumer is facing high prices. What is your message to the average Canadian? Because we know if they change their behavior based on their expectations, they don't believe the transitory story, that can have some bad effects for our economy.
It's a very good question. And let me offer a couple of things. First of all, I want to assure Canadians that we have heard what they have to say. When we've talked to Canadians through surveys, when we've talked to Canadians through focus groups, what comes back very clearly is they like low, predictable inflation. They manage their home budgets closely. Rising prices impinge on that. And I do want to assure Canadians that they can be confident that we will control inflation. We responded in force at the early stages, the acute stages of the pandemic when the fear was deflation, and that has worked. And Canadians can be just as confident that we will keep inflation on our target over time. As I indicated to Julie, there are good reasons to believe that these price increases will be temporary, or the implications for inflation will be temporary. Prices have come back up. Part of that is base year effects. Prices were very low a year ago. They've normalized. Part of that is related to these very unique circumstances of the pandemic. And what we have seen as we've gone through this pandemic is we do work. There's a lot of ingenuity. We do tend to work through these. Lumber prices were 4 times their pre-pandemic price a few months ago. They've come pretty much back now. We are working through these, but it is going to take some time. But I do want Canadians to be confident that we certainly understand that our job is to make sure that one-off price increases don't become ongoing inflation.
Thanks. We'll go to Mark Rendell now, followed by Kim McCrail.
Hi there. Thanks so much for taking the call. Can you hear me?
Yes.
Perfect. Thanks, Governor. So I have a bit of a forward-looking question about the upcoming mandate renewal. I'm wondering, a lot of the research that was done for the mandate renewal, a lot of the focus was on, the previous period of low inflation, slow economic growth. Now we're in a period of, what appears to be high and perhaps slightly more persistent inflation, and certainly a lot more public conversation around inflation. And I'm wondering, does the research that was done for the mandate review about the challenge of low inflation, the effective lower bound, all of those issues still hold as we come into the kind of final stretch of the mandate renewal, or has the jump in inflation changed the conversation and changed how you're looking at that mandate renewal process?
Well, I just begin by reminding you, we've had inflation targeting now for 30 years. And when inflation targeting was first brought in, the big concern was inflation was too high. In fact, they were inflation reduction targets. A lot of the value of the inflation target was to try to anchor inflation expectations to around the target so that they didn't move higher, and that created further pressures for inflation. So we've been through both sides of this now, and that is reflected in our research. I would underline that the period of the last 18 months or so, we have learned a lot. We've used quantitative easing for the first time. We stood up a whole series of exceptional programs to deal with short-run disruptions in credit markets. Those largely worked. We've closed most of those down. Our QE, we've ramped it down, but it is continuing. So we've gained a lot of operational experience, and certainly that will feed into the renewal. But I would stress that in thinking about the framework, we need a framework that is robust to a broad range of circumstances, and really that's what we will be focused on. We've over the 30 years of inflation targeting, we've seen many circumstances, and that will all feed into the renewal.
Thank you. We'll go to Kim McCrail now, followed by Eric Hertzberg.
Hi, thanks. This is Kim McCrail at the Wall Street Journal. Governor, you gave a speech last month talking about the process for moving into a reinvestment phase in quantitative easing, where bond purchases would be at a level that maintains the holdings that the bank has at roughly a stable level. Do you anticipate that the next reduction in weekly bond purchases will take the bank into that reinvestment phase?
Well, Kim, we'll take monetary policy decisions when we get to the decision date. I think we've tried to be pretty deliberate in our communications and our assessments of by putting out our forecasts and providing commentary on where we think we are relative to those forecasts. I think that the market hopefully can get a pretty good idea of where we're headed.
Okay, we'll go to Eric now, followed by Jordan Press.
Good afternoon, Governor. Can you hear me?
Yes, Jordan.
Hey, it's Eric Hertzberg with Bloomberg News here. I just wanted to discuss GDP growth. In the second quarter, it came in well below the bank's estimates. In the third quarter, is also tracking below your 7.3% annualized. What are the implications for the closing of the output gap, in your opinion?
Well, as you indicated, Q2 was a bit weaker than we expected in July. Having said that, as we highlighted in our press release and my remarks just after it, when you look at the underlying strength in domestic spending, it was actually a little stronger than we'd expected. So, we did see, even if the number was slightly negative, we still saw some underlying strength there. Moving into the third, the fourth quarter. Look, we continue to expect to see a strong second half of the year. As I indicated to one of the previous questions, in labor markets, we are seeing that this process of workers finding jobs and companies finding workers is taking. It is complicated, and it could move a little more slowly than we expected. But the fact that we continue to see large numbers of vacancies and we still have unemployment over 7%, there is room for that to happen. The demand is there, so we do expect that to play out. And when you look at GDP more broadly, again, we are expecting to see a good second half. These supply disruptions that I mentioned in the context of inflation, they're also showing up in terms of production and spending. Shortage of computer chips is affecting production of motor vehicles, for example. That you can see that in our exports. Our exports are being held back by that. You can see it in some parts of spending on goods. Households are either delaying purchases because things like cars are more expensive now, or they simply can't get certain things. The shipping delays are making it harder to buy certain things. So that is delaying some spending, and it's also deferring some investment. To give you an example, fleet sales or fleet purchases of cars by companies, those are down, and that's very likely related to the fact that deliveries. It's hard to get deliveries of a lot of cars right now. So what all that means is that the track for GDP goes probably a little bit slower than what we put out in July, but we do continue to expect a good rebound.
Thank you. We'll go to Jordan Press now, followed by Heather Schofield.
Good afternoon, Governor. You just talked about how, for instance, the matching of jobs with employers has taken a little longer, or workers with employers, I should say, has taken a little longer than you may have thought. It may take a little longer. It may take a little longer to unfurl some of these supply chain bottlenecks that we have. I'm wondering how you can tell people and tell Canadians to kind of keep calm and carry on, as it were, given that some of these issues that you're expecting to kind of unravel themselves naturally are beyond your direct control.
Well, as I mentioned earlier, we are acutely aware that Canadians are paying higher prices for some of the goods that they're affecting, and overall inflation is above our control range. When you step back, I think things are evolving largely as we expected. This pandemic keeps throwing new curveballs. So yes, some of those there are some new complexities. Working through some of those issues is likely to take a little longer than we expected. That's showing up in inflation. It's also showing up in inflation. Could be the higher inflation could be a little more persistent. It's showing up in GDP, and then that recovery could be take a little longer. But the underlying forces are still there. The direction is very much in the range. The direction is very much as we previously outlined it. So yes, it might take a little bit longer, but we do continue to believe there are good reasons why the impact of these supply disruptions on inflation should be temporary, and there are good reasons to believe that the economy, the recovery, will pick up and continue.
We'll go now to Heather Schofield, followed by Tony Mace.
Hello, Governor. Thanks for taking my question. You mentioned in your remarks earlier today about, you noted that there was a labor shortage in some parts of the economy. Simultaneously, we have a slow recovery among low-wage workers in particular. And I'm wondering if you think this bifurcation is exacerbated by COVID supports, and is there a policy solution, either monetary or fiscal, that could resolve this kind of bifurcation?
How affected it is by COVID supports is pretty difficult to answer. I have to say, I think when we talk to people, what you hear is that there are a lot of reasons. People may be nervous about taking public transportation. People may be nervous that their employer doesn't have an environment that is as safe as they want it to be. Families are dealing with their children are back at school. Children gets a cold. All of a sudden, all their children need to stay home. Somebody's got to be home with them. There are. I think what we see in this pandemic is there are a lot of consequences that are affecting people's lives in real ways, and that is affecting their ability to get back to work. Look, I think the most effective thing from a policy perspective is for Canadians, get as many Canadians as possible vaccinated. As I said earlier, the ability of us, Canadian economy, Canada, to deal with this fourth wave is we're dealing with it much better because of the high rate of vaccination. The more people we can get vaccinated, that's the best public health policy. It's also the best economic policy.
We'll go to Tony Mace, and then we'll conclude with Kevin Carmichael. Tony?
Hi, Governor. I wanted to ask you about the back-to-school season as a factor in connection with the employment market. What is your sense of how that is unfolding and how it's affecting people returning to work now? Thank you.
Well, we don't have a lot of official data yet, really, since back to school has been, since children have been back to school. So it's a difficult question to answer. But what I can tell you we've been through a few waves now, so we've seen what happens. And certainly when children are back at school, the labor market participation of women improves. When children are at home, it's affecting parents, but it's disproportionately affecting women. Many of them are, they're leaving the workforce to be home looking after their children. Highly understandable. So I would expect to see, and we have seen actually a fairly good rebound in female participation. Women are still a little more affected. Female employment is still a little more affected than men through the pandemic, but the gap has narrowed. And I would expect as children go back to school, we should continue to see that narrow further.
And we'll conclude now with Kevin Carmichael, please.
Hi, Governor. Your remarks about inflation have focused on the supply side for good reason, obviously. To what extent is inflation being driven on the demand side, though? Should we assume that the fact that hasn't come up in any of your commentary around inflation means that you're not really seeing any signs of inflationary pressure coming from the demand side of the economy?
Well, Kevin, what we are seeing is pretty good demand, particularly led by the consumer. That's good news. That's underpinning the growth in GDP, and what we expect to see. We're seeing some broadening of this into exports. U.S. is growing at a solid pace, even if it's probably going to slow down a bit in the second half of the year compared to the very strong first half. But it's still pretty solid. It should provide good support for our exports. The main thing that seems to be holding things back are these supply disruptions, and that's why we're focused on them. In terms of demand, there's still considerable excess supply in the economy. There is still capacity for the economy to grow, and there's capacity to meet that demand. What's holding it back is largely these supply constraints, which are related to the unique circumstances of the pandemic. And so working through those is going to be critical to both, getting continued growth in GDP and getting inflation to come back down. And I know we're getting close to the end. I'll just say that, so next week I am heading to Washington, my first international trip as governor, live in person. I'm certainly looking forward to seeing some of my colleagues in person. And a lot of these supply chain issues, these shipping issues, they are global, and I think it's going to be timely for us to all get together and really understand what are the prospects for working through these, based on the information we can all bring to the table. Thank you.
And that concludes today's press conference. Thank you very much, Governor Macklem, and thanks to all of you for joining us. Bon après-midi à tous. Thanks very much.
Thank you.